Good morning. It is Friday, July 17th, 2026. The market is showing some weakness. This comes after a strong run to new highs. It is normal to see prices pull back. This does not mean the trend is over. Think of it like taking a breath. The long-term direction is still upward. Many large stocks indices remain in solid uptrends. This is the big picture. Do not let one or two down days change your long-term plan. Short-term traders, however, should pay close attention. This is where opportunity can be found. Yesterday's session saw sellers emerge. They pushed prices down from their recent peaks. This selling has continued in the overnight markets. This is not a cause for panic. It is a reason for caution. Let us look at the specific ETFs. These are the tools many traders use. They give us a clear view of the market's health. We will start with the biggest one, the SPDR S&P 500 ETF, or SPY, tracks the 500 largest U.S. companies. It is a good gauge of the overall market. Today, it is showing some pre-market weakness. This is expected after yesterday's close. The key is to see if buyers show up to support it during the day. The longer-term trend is still their friend, but the short-term momentum has faded slightly. SPY S&P 500 ETF, price 750.00, pre-market minus 0.55%. RSI 52, support 745, support 740, support 735, resistance 751, resistance 755, resistance 760, bias neutral to bullish. The uptrend is intact as long as it holds above the 740 to 745 support zone. Next, we have the QQQ. This ETF tracks the Nasdaq 100. It is filled with large technology companies. This group has been a market leader for a long time. Today, it looks like the weakest of the bunch. The pre-market price is down more than the SPY. This tells us that technology is the source of the market's current anxiety. A break of the key 700 level would be a significant technical event. It would suggest that the recent selling has more room to run. Traders will be watching this ETF very closely for signs of a breakdown or a recovery. QQQ Nasdaq 100 ETF. Price 704.50. Pre-market minus 1.10%. RSI 46. Support 700. Support 695. Support 690. Resistance 706. Resistance 712. Resistance 720. Bias neutral to bearish. The weakness is notable, and a break below 700 would be a bearish signal. Finally, for the major indices, we look at IWM. This ETF tracks the Russell 2000 index of small-cap stocks. These are smaller companies. Their performance can tell us about the health of the domestic economy. It can also tell us about investor risk appetite. Now let's turn our attention to precious metals. Gold and silver often tell a different story than stocks. They can act as a safe haven when investors are nervous, or they can fall when investors are confident and chasing returns in the stock market. Right now, gold is looking weak. The SPDR Gold Shares ETF, or GLD, has been in a downtrend. The price is below key technical levels. This suggests that investors are not currently rushing to the safety of gold. They may still believe that the stock market pullback is temporary. GLD Gold ETF. Price 368.00. Pre-market minus 0.75%. RSI 41. Support 365. Support 360. Support 350. Resistance 372. Resistance 380. Resistance 385. Bias bearish. The trend is down, and there is little evidence of a reversal just yet. Until GLD can reclaim some of its resistance levels, the path of least resistance appears to be lower. Traders should be cautious about trying to catch a falling knife here. The weakness in gold is a warning sign for those expecting a big market crash. In a true panic, we would likely see money flowing into gold. The fact that gold is also falling suggests this is a more orderly pullback in stocks. It could also mean that rising interest rates are making gold, which pays no dividend, less attractive. Silver often follows gold, but it can be more volatile. The iShares Silver Trust, or SLV, is also showing weakness. However, its situation is slightly different. The price is approaching a major support level. Its Relative Strength Index, RSI, is also getting close to the oversold territory below 30. This does not guarantee a bounce, but it does increase the odds. It means that the selling may be getting exhausted. A smart trader would watch for a sign of reversal here, like a strong green candle on high volume. Section 4. The 0DTE Trader's Playbook. For those who trade 0DTE options, today is a day for a clear plan. These options expire at the end of the day. They are very sensitive to small price movements. This means you must have simple, clear rules. Do not overthink it. Your goal is to catch a short, fast move in one direction. The key is waiting for the market to prove your thesis. Do not guess. Wait for the levels we have identified to either hold or break. The first 15 to 30 minutes of trading will provide a lot of information. Let the initial chaos settle down. Here is a simple plan for a bullish move. This scenario becomes likely if buyers show up early and defend the support levels. If you see the market absorbing the early selling and starting to climb, this is your trigger. Look for all three major ETFs to be trading above their key pivot points. Bullish scenario. Trigger. SPY trades and holds above 751. QQQ reclaims and holds above 706. IWM trades and holds above 297. This confirmation from multiple sources gives you a higher probability of success. Remember to use tight risk controls. These trades can move very quickly in either direction. Plan. If these conditions are met after the first 15 to 30 minutes, look for quick long trades on pullbacks. On the other hand, here is a plan for a bearish move. This scenario plays out if the overnight weakness continues after the market opens. A failure to hold key support levels is a major red flag. If prices break below these levels and cannot recover, it signals that sellers are in control. Beat Section 5. The Opening Bell Checklist. In summary, the market is at a decision point. The long-term uptrend is facing its first real test in weeks. The focus today is on two numbers: 745 for SPY, 700 for QQQ. These levels are the line in the sand. How the market behaves around them will shape today and next week. Overnight weakness led by tech makes QQQ level especially important. A break below 700 could usher in a new wave of selling. Two primary cases at the open. Case A, the bullish case. Market opens lower, tests support, buyers step in. SPY holds above 745. QQQ reclaims 700 quickly. Pull back over. Buyers buying the dip. Possible reversal day, gap fill and close higher. Strong signal for bulls. Case B, the bearish case, selling pressure too strong. SPY fails 745 and breaks with conviction. QQQ remains below 700. Sellers confirmed in control. Odds rise for a downside trend day. Short trades favored. Avoid buying dips until new support forms. Before trading, use this simple checklist to stay calm and focused. Do not deviate from your plan. The market will try to confuse you. Stick to your rules. Build discipline. Survive and thrive as a trader. Stay calm. Be precise. Let the levels guide you. Opening checklist. 1. What is SPY doing at 745? 2. What is QQQ doing at 700? 3. Is IWM showing strength or weakness relative to QQQ? 4. Wait 15 to 30 minutes for confirmation. 5. Execute with small size and clear stop losses.